So what I want to share with you today is an actual video from my latest training that I've created on my website, Online Training for Entrepreneurs. And this is a training that is on business foundations and YouTube business building. And what I'm going to do is offer a early bird discount for the first 30 that are interested in participating in this program, which is for anybody that's an entrepreneur or aspiring entrepreneur. And if you want to know more about that, you would go over to onlinetrainingforentrepreneurs.com. The link is in the description. And watch this first video that I posted on there. It's about 12 minutes long and it gets into the details of what's covered in this program. Now, this is a program that I'm planning on building further. Right now, there's 11 and a half hours of highly concentrated, deeply reflected upon action-oriented content that's in there. But I want to build further and further and further, so I would like some participation for those of you that would like to be the profitable guinea pig and build this course further alongside with me. Because when I do go out to the mass market, the price is going to go up. And so for the first 30 students that want to participate, use the code 30students and you will be able to save an additional $50 off the price. And then what will happen is you can participate early and you take advantage of that offer. Now, even though the price is listed at $97, when I do go out to the mass market, I am planning on raising the price up, obviously because I'm going to be sending paid traffic and cover the overhead on the advertising fees and the promotional fees, etc., as well as the content being more expansive, more detailed, more specific. This is not a totality business building course, nor is it tactical and how to do things to hack the system and so forth to make money, get rich quick, nothing like that. This is all business building foundation stuff, everything that I've learned in business over the last 9 years in entrepreneurship. And it's built on my experience and the principles and philosophies and strategies that I used. And if you want to be part of this, sign up today. Again, that code is 30 students. For the first 30 students only that use this code, you'll be able to take advantage of that. And I hope you enjoy the video. Okay, in this video, we're going to talk about the finance spreadsheet. This is arguably one of the most important elements of this entire program. If you know that I'm really big on figuring out where the best use of time needs to be invested, the best use of our resources, opportunity cost, etc., then what really matters is where we track where our actions go each day and then consolidate it and look at a dashboard, a report that is designed to help us make educated decisions and optimize our behaviors, our actions that we do every day towards a highly profitable outcome, both in the short term and the long term and even the medium term. So in the monetization video, I talked about short plays, long plays, medium plays, and diversifying and figuring out all the different ways that you can monetize what you're doing and looking at the alternatives based on what you're doing right now and mixing, matching, and combining and testing. So the spreadsheet really helps you ground in reality and figure out where your time, energy, and opportunity cost resources are going to a certain level of granularity. Now, I don't like to overthink things, but at the same time, this spreadsheet is pretty comprehensive. A lot of you might not know, but when I started out in business, the first 2 years, I lost $20,000 of my capital. Now, because I lost $20,000 of my capital, I've reflected upon it over many years. And by the way, after those few years, I was able to grow it and become very profitable and so forth. I reflected upon it and I recognized a lot of things that I didn't do properly. And a large part of it had to do with tracking where my time goes and focusing on the most profitable opportunities and really staying disciplined versus not. Now let's rewind even 5-6 years prior to that. I had been in about $50,000 debt when I was 24 years old. And I had a well-paying job and I was working in corporate, but I still found myself into debt. And that's when I came across the movie The Secret and Napoleon Hill's Think and Grow Rich, and really put my mind into figuring out how to take a firm grasp on my financial health. And I started out with this insight of creating a very basic spreadsheet, very basic. And then what I did was I just focused on extracting statements from my bank account and my credit cards, placing them into a very basic spreadsheet, taking the income that came in, looked at my expenses and did a calculation to really figure out what I was going to be as far as profitability goes or lack thereof, and to be able to figure out how I could pay my credit card debts off, pay my loan debts off, etc. Now, fast forward a few years later after that, I was able to get out of debt and buy my first house. So I was able to save money, get out of debt, and buy my first house. Now, I worked very hard during those years, put in a lot of time, and made more, but it was really the spreadsheet that helped me gain control and grasp my financial situation. Now, when I started business in the first few years, I found myself in $20,000 debt. If I didn't have a base spreadsheet, it could have been a lot worse. And that's one of the reasons why a lot of businesses fail, because they don't have an understanding of their financial health. Now, when my business started to grow, I started incorporating other elements into the spreadsheet, which I want to share with you right now. So this is the latest and revised spreadsheet that I use. And you can get even more granular, and really that depends on what you want to get out of it and what insights you need. But I recommend that you start with at least a base. You could use the spreadsheet that I'm using right now. Or if you don't like spreadsheets, and you can use tools like mint.com, and maybe your bank provides certain kinds of tools, online platforms that are able to track your income and expenses. But I prefer the spreadsheet. Now, a lot of this information that's in here is probably not going to be relevant to you. So you can customize this any way that you want. But I want you to be careful, because there's a lot of formulas in here, complex formulas that I learned, and by the way, this is on Google Sheets, that calculate based on the other tabs here. So if you're going to modify it, make sure that you test and you get your accurate calculations. So let's look at the fundamentals here. This is the very first sheet that calculates the totals. What I'm interested in here is the bird's eye view of how much money is being made and where my expenses are going in certain levels of categories, so I could figure out how to either reduce those expenses or earn more income to not only make and break even, but increase in profits so I could save and invest in other areas of my business, etc. So this gives me a bird's eye view. Now, the calculations over here, you're going to see another thing I put in is I want to know how much time I'm investing as far as work goes every week. Now, this is just some dummy data that I've populated on here. This is nothing accurate, but I just put this dummy data in here so you can see. You don't touch any of these numbers right here. This is all calculated. This I want to know right here. I put the week ending date, and the amount of hours that I work, and then I create these other columns here in which I split it up so I could see where my time goes as far as bird's eye view. So these are all the calculated total hours that I put in, which is gathered from the Hours Tracker app, which I talk about in the Software and Tools video, because we want to be able to track our time to make educated decisions as to what is the best use of it. And when we can compare it to the numbers that we pull from the income that we get minus the expenses, then we can see what our calculated hourly rate is. So what happens is I put that in there, I get a bird's eye view. This data right here is really populated based on a couple of tabs here. Number one is this, which is the expense tab, and it's labeled C, which I just say is cost, but you can relabel it whatever you want. And what you want to do is browse down to the bottom of the sheet, and you'll notice that there are these conditions that I put in here, which can be changed every year, but they're really there because they do some calculations. And, I'm not a spreadsheet master, so there's probably better ways, and some of you out there know how to turn this into a database or program it into something that's a lot slicker. But in certain areas, I don't get too sophisticated, but it does the important calculations. So what am I interested in here? So this is where I take data from my credit cards and my bank, and I throw it in here, and I set it up in columns so I could just easily copy it and paste. And then I tag each one of these with the appropriate expense. So these are all expenses. So let's say on February 1st, 2018, I had ice cream and it was $50. And then I had a bank fee of $5 on February 3rd. What happens is I put the date in here, which is exported from the sheets or the bank statements, or copy and paste from the bank account, online bank account, and then I tag them over here appropriately. So if we go to the totals, for example, and we look at February, we'll notice that there is the bank fee and there is the personal. So ice cream was tagged as personal. Now, I segment, and I'm not going to get too complicated in this, but when you're starting out in business, it's always good to separate your personal from your business account. But I do things a certain way with a certain level of thinking, which I want to know my overall financial health and I want an overall net worth understanding. So in a way, I kind of blend my personal and business. But when it comes to sending stuff to my accountant, which I have, she helps me with all the business financial stuff. It's really done through segmented spreadsheets. I don't send her this. So take what I am explaining right here, my process, and it works really well for me and it helped me grow. But what you're going to want to do is adapt and adopt it towards your style and your business, but really keep into consideration that the fundamentals are we want to track where our income is coming from, we want to track our expenses, we want to track how much time we're investing in this and what it's really producing as far as returns. We want to track our net worth and even compound interest, which I'm going to talk about in a moment. So you just simply input the data over here and then you tag it appropriately with the date, and then it pulls the totals in the first sheet, the totals. Next is the income. Okay, so over here what we do is date. I put D date, deposit date. Ignore some of these terminologies that I use. They're just my own personal terminologies, but I'll give you the fundamentals so you can edit and put whatever titles you want for these columns. So fundamentally for me, there's only two kinds of income. There's business income and other income. Other income is just stuff that I want to track if I get income from other sources that are not related to business, but you can do whatever you want. You can even create even more sections if you want. If you go down to the bottom, you'll see there's the conditions right there for the calculations. So I put deposit date, the amount, taxes, if applicable, funds, client, invoice date, number, type. You might not need to use these, but here are the pieces that you want to keep into consideration. So let's say, for example, on February 8th, I was depositing $500 for some consulting that I did for Jim, and that essentially resulted in me doing half an hour of work. You see which is work 1. This is the calculation over here. So if I put 1 hour, it would factor in that I did 1 hour. And so what I really ended up doing, and this is just a dummy example, as I mentioned, I did half an hour, and then there was a $10 expense. So there was like a fee that was associated with some software that I use or something. And you don't have to, I put contractor here. So let's say I had to pay somebody on Fiverr $10 to do some contracting piece as a result of that consulting deal. I put contractor, and if the funds were captured in PayPal, then I put the PayPal rate is automatically calculated. So you don't have to put that in there. You just drop this down and you do yes or no. And it calculates the PayPal fee, which is per transaction of 30 cents, and then the rate, which is 2.9%. So the PayPal fees off $500 would be $14.80, and then the net earnings based on the PayPal fees minus also the expense fee is $475.20. The adjusted hourly rate is $950.40. So one of the reasons why we do this is because we want to recognize, let's say you're billing out a client at $500 an hour. Well, let's say you work 1 hour, you'd make $500 an hour. But what a lot of consultants and business owners don't recognize is you invest time in the beginning to prep for that client, or maybe there's travel time, and there's even some post work you got to do and whatever kind of communications and different things like that. So when you track your time and see where it goes and you clock in and out of a project for that client, you put the real number in here as far as your time, how much you worked goes. So if I change this to 1.5, you could see the adjusted hourly rate gets brought down, factoring all this expenses as well as the time invested. So even if you're billing out at $500 an hour, you could see if it took an hour and a half to fulfill on this $500 an hour consulting with some expenses and PayPal fees, etc., you're really only making $316 an hour. So at the end of the year, when you estimate how much you could potentially earn and you factor these things, you'll get a more educated number, as well as based on it, you can adjust your prices accordingly so you can meet your financial goals. And I mentioned that consultants make these mistakes and then they realize why they don't hit their numbers at the end of the year because they're not factoring all these things. And we don't want to guesstimate, so we want to track our time using Hours Tracker, clock in and out of projects so that we can make an educated decision as to where our time goes. Now, you just populate these in here as you go through the year. And another important element to this is this net worth calculator that I have here. So this is cool because you put in the amounts in your accounts, and then if you have credit cards or any kind of debts, you put that in there. And then this calculates your net worth. So this is some dummy data right here. So if you, for example, say, okay, today is, well, let's just copy and paste so we don't take too long doing this. Let's say today was May 17th. And in your account number 1, you had $1,000. In account number 2, you have $2,000. In account number 3, you have $4,000. And then your account number 4, you had 500. And in your credit card, you owe 2,000. So we just drop this down like this, drag and drop, and your total net worth is 5,500 based on these numbers here, minus credit card debt. And then you can see based on it, it just automatically populates this growth chart here and puts this number. And the goal with this is to calculate your net worth as far as your business assets. Again, this is very bird's eye stuff, right? But one of the things that we want to look at is our net worth or overall, and you can rename this to whatever you want. It's really based on my way of thinking, but I think you're following the train of thought here. What we really want to do is capture our growth overall net worth so we could see if we're making progress and not set ourselves up for disaster. And these different accounts could even be replaced by things like investment accounts, for example. Your investment portfolio in a certain mutual fund will grow, so you put that number on the date. Let's say you had a house, you could even guesstimate based on looking at real data as far as a market value of the house, and put the market value over here and it'll do the calculations. And then what we're looking to do is think of your business and your multiple streams of income and your assets as an overall wealth portfolio, because that's the way we got to do this. And then what happens is, based on that, we want to see the growth, and we want to be able to predict and make educated decisions as to where our growth goes. And one of the ways to assist with that is really play around with this other sheet that I've included, which is my compound interest calculator. The way it works is, let's say you want to be worth $1 million by the time you're 65, and you're at 37 years old right now. What you have to do is you got to play around and figure out, based on interest rate, what kind of interest or business growth, because you could either substitute the interest rate for business growth, the percentage of growth that you want to make each year to be able to hit your financial net worth of $1 million by the time you're 65. So let's say you started off with an initial investment of $5,000, and your business was going to consistently grow every year 9%, and you were going to net in your business after taxes, after expenses, everything, at the end of the year, $50,000. So not only are you banking that $50,000, but your business is growing, and that investment which you're banking, you reinvest back in your business, is growing at a calculated rate at 9% per annum. What ends up happening is, you could see based on the compounding interest and the contributions of $50,000 every year, that realistically by the age of 65, you will be worth $5.7 million. Sounds very interesting, but a lot of people just don't do this. And this is really how this stuff works. And not only, the magic of compound interest is one of the greatest things that you could ever realize and work with. Okay, so this means that even somebody, let's look at this for a moment. Let's say your initial investment was $5,000, and you had a business and various opportunities that are diversified that were growing at the rate of 10% per annum. Okay, we're talking about hedging, and I'm not going to get too complicated into the financial stuff because this is 101, but you want to note any of these areas I'm talking about and either email me if you have any questions or go and research further. But think of your business activities, the passive streams of income and the various opportunities that you're involved with as a diversification strategy and a hedging strategy. And then let's say every year as a result of that, your growth is 10%. And then even if you're not saving 10,000, let's say you're just saving, or 50,000, let's say you're saving an additional 5,000 every year. Well, still going at that rate, by the age of 65, you would have saved $743,000, which is significant. Now, obviously, we're not keeping in consideration inflation and things like that, and you want to factor that in, maybe throw that in the interest rate calculations, etc., to figure out what you need to be worth at a certain time in your life to be able to comfortably afford the lifestyle that you want to live, etc. But this helps you make educated decisions. So to rewind, we got the total. We got to input our expenses in the C tab. In the I tab, we input our income for the year. We calculate our net worth. And then we every now and then revisit this and look at our strategy to be able to figure out how much we need to make every month, every year, etc., how much we need to save, how much we need to invest. Bird's eye view. Okay, this is bird's eye view stuff to be able to hit our financial goals both in the short term, medium term, and long term. Now, this helps influence the kind of decisions that we make as far as products, services that we create, and where our time, energy, resources need to be invested in our business to be able to get there. Another helpful sheet that I've included, which you'll find very useful, is this client value sheet, which not only serves as a client value, as in figuring out lifetime client value, which we've covered in monetization, as well as the material that I did in the business foundations, the first video, and any other subsequent videos where I talk about lifetime client value. But this is how we calculate it. Okay, so think of it both from a macro and a micro. Okay, say you've got a business, and it's a very, very straightforward business. And in this business, what you do is you sell a product at the front, okay, to acquire the client at $97. And then from there, you offer them a $197 product, and then a $397 product, and then a $4,997 product. And this could be as simple as far as format goes, and I recommend watching the video I did on monetization on the YouTube and the monetization I did on the foundations, because I talk about funnels to a certain degree in there. And essentially what it is we're building a relationship with a prospect and a client. We're making an initial sale, and we're further building the relationship so we can increase the amount of times they come back to us and buy either product services that we offer or that we partner with somebody else to create and offer to that same client. So that being said, when we look at it, realistically, when you've got a good relationship and you provide value and they get results, they're able to reinvest the profits back into higher levels of growth for them by paying you more, and so forth. Now, let's say this was a business and the front end was a $97 product and then $197 a higher end product. Let's use the world of business consulting and any online information product realm. So $97 would be, let's say, a front end course. $197 could be a call series that you do, 2-3 calls a week for 2 months or something like that, which is group calls. And $397 might be a ongoing monthly coaching in which you do 1 call per week with them, and you give them strategy and you look at what they're doing, you optimize, and you tell them to move forward. And $4,997 might be a package of things that were offered that's more personalized, done for you. Remember I mentioned the 3 things, the done by you, done with you, and done for you. And usually done for you packages are at a higher price point, in which you're more involved with the client's growth, etc., and you're doing more things for them, so thus you charge more. Okay, so let's say these were the price points. Now, if the goal here, and let's say this is a yearly projection, or you could look at this from a lifetime projection. Let's say our goal is to make $100,000 with our business. What we want to do is we want to play around with some numbers. We want to look at the price points. We want to look at how many clients we need to acquire. We need to look at how much time is invested in that. We need to look at our overhead so we can figure out how much we can make as far as revenue, but more important than that, net profit. And we also want to look at what the hourly rate is to figure out the alternatives. Now, the reason why we want to know hourly rate is because a lot of entrepreneurs spend like 15 hours a day working, and I talked about this in my productivity section. I don't believe in that. I don't believe in spending 15 hours a day to grow your business, because if you calculate a lot of times how much money they're making, a lot of times they're better off just quitting and leaving the business because they've been doing it for so long, and then just going out and getting a job, because maybe then they would make $30 an hour, $40 an hour. But with their business, because they're putting so much time, energy, they might be making 20 or 30% more than they would make in a job, but they're essentially doing double the work. So their adjusted hourly rate is like 15 or 20. You following me with this? So we want to calculate this and make educated decisions as to what are the best opportunities, what are the alternatives, what are the price points we need to charge, so that we can comfortably say, look, if you do a little calculation here, let's say this was the actual numbers here. In order to make $39,000 or almost $40,000 a year, you would do all these things, and essentially this is what would happen is you would get that. An adjusted hourly rate, if you look at how many hours does a person need to work to make $40,000 based on this model here, divided by 197. Essentially what it is I'm going to just pull up my calculator here. 40,000 divided by 200 is really just 200 hours, right? So 200 hours at $200 an hour is $40,000. So 200 hours, if you divide that up into 52 weeks, okay, 200 divided by 52 is really just 4-hour weeks. So if you did a 4-hour work week and you had a business that had this kind of process in it, and was paying you an adjusted hourly rate based on the initiatives at $197, and keep in consideration some of these are automated processes, then it's a pretty good business. And it's, like, depends on how much, and pretty good is relative also. So just some people who make like $1 million a year, $197 an hour is not worth it of their time. But that's all relative, and this is not designed to give you the absolute of how you should do it, but rather help you make educated decisions. And if you want more assistance in this would require my help more personally. But we're trying to be as general and as specific at the same time in this video. So let's go ahead and use a scenario here. Let's say we want to make $100,000 net a year. Now we got to play with these numbers. Well, let's say this price point of $97 is good. We can create a front-end product that's $97, whether it's a supplement or a course or something like that. And then we can create something that's also a little bit more hands-on, but not as much, and we can charge a little bit more, $197. Then we can offer something at $397. And let's say we can't do this. Let's say we can't do $4,997, maybe because we don't have the confidence to charge that much, or maybe it's just realistically it's not possible. So let's adjust this. And if we want to make $100,000, we have to look at these other numbers based on these price points. How many clients we need to acquire, how much time and overhead needs to be invested. And this is where we do a calculation. We want to do a calculation prior and even during to adjust these numbers, because these numbers might not be as accurate as we get down to it, because we might underestimate, and a lot of times we do underestimate the overhead and time that needs to be invested. So that being said, let's say we have to acquire 200 clients for the first offer, and out of those, 50 of them can buy the second offer, or we estimate that would buy the second offer, and out of those, 30 of them would buy the third offer, and then out of the fourth offer, 15 of them will buy. Well, we're still not hitting our numbers here. As you can see, net earnings is $68,000. Well, we said we can't increase our price, but what can we do? Well, we'll probably need to acquire more clients. So let's say 290 over here, turn this into 80, turn this into 40, and then turn this into 22, let's say. Well, now we're at 101,000 net profit. But we also have to keep in consideration how much time needs to be invested. So in order to create this, fulfill this, manage it, whatever, how much time does one have to invest in a year or per project? Because one of the ways of looking at this is not just as a overall one-year business, but imagine this being a campaign that you run, a business campaign or launch campaign, internet business launch campaign, in which the campaign, which would take like a month or two, would generate $101,000 net profit. How much time needs to be invested before and during and even after to be able to get that? Well, let's say these numbers now change, and this goes 200 hours over here, 30 hours here, 15 hours here, and this is like 50 hours, let's say. Now, adjusted hourly rate goes down to $351, but we also want to look at our overhead. So let's say my overhead started to go up now that we've adjusted these numbers. This goes up to $2,300, this goes up to $1,900, this stays at $900. Well, that brings our net profit down. So maybe we have to now adjust and make more sales. Let's say we have to adjust this to 43. Well, that still doesn't hit the number, so we're going to adjust this to 23, and now we hit the 100,000. But that might also impact the time invested and overhead. And then our adjusted hourly rate essentially is $339.97. Now, depending on your alternative options and opportunities that you have available, that's a pretty good hourly rate. And most business owners really want to be making that kind of money. I'm talking really, okay? What's interesting is, let's say there's a business that makes $100,000 a year. Guaranteed most of the time, because they're not looking at these numbers, their adjusted hourly rate is not $339. They might think it is, and they might bill out their clients at that rate, but they're not factoring, as I mentioned, the overhead, time invested before, during, and after to be able to educatedly make a decision on their pricing. And thus they'll just bill out at $300 an hour, and then they'll wonder why at the end of the year they made $100,000, but they were working 15, 20 hours a day. Look, by all means, if you choose to work 15, 20 hours a day, why not work 15, 20 hours a day and make $39 an hour versus thinking that you are making $339 an hour because you're not tracking your time, but you're really working 15 and 20 hours, and thus your adjusted hourly rate is going to be way lower than that. And I don't want to do the calculation right now because that'll go too much in depth, but I think you see where I'm getting at here. So this tab on the spreadsheet, the client value, helps you make educated decisions on lifetime client value, projects, funnels, how much you need to make, time invested, overhead, adjusted hourly rate, so you can figure that out. That's going to help you influence your products, projects, different niches you're going to get involved with, readjusting, repositioning your business, which is a constant process because look, part of it too is that the market changes. So we have to adjust these accordingly. So as much as we're able to predict it, it's kind of like investing. You can't really know, but we can make better educated decisions so we can adjust accordingly so that the likelihood of success goes up. Now, you don't have to overthink this because I know I'm covering a lot and keeping this video very concentrate. So it might sound very overwhelming in the beginning, but keep in consideration, if you just start out basic, then when you get to a certain point in business, this video is going to seem basic to you because I'm not really covering the totality. So in my level of understanding, this seems very general, but maybe in your level of understanding it currently where you're at, this might seem really advanced, but we just need to implement bits and pieces so we can get started to eventually get at the point where we can increase the likelihoods of success. And by the way, doing this, you're setting yourself up on the trajectory because even though all businesses make a lot of money, it's kind of devastating actually because they're not really implementing what we're talking about here. Okay, they're not, even if they're making good money, they're still not implementing this, and thus they're probably losing a lot of money, and they could really tighten and increase their profits. And when you're increasing your profits, we're not trying to be cheap. We're looking at increasing our profits to figure out where to reallocate and reinvest those resources into some other place that's going to really benefit our team, our marketplace, our business growth, etc. So again, to recap, we got the totals over here. We need to input our credit cards and our bank statements in here. Calculate how much we're making, putting these numbers in if possible so that, if you go down and scroll down at the bottom here, you can see some totals of adjusted hourly rate, etc. We want our net worth growing up, and we want to be able to predict that. One of the ways to help us predict it is figure out how much growth we need to make every year, which is helpful looking at this compound interest calculator. And then we want to look at our client value, campaign value, whatever you want to call it, and our business value by looking at these key numbers and make our decisions based on pricing, etc., and how many clients we need to acquire. Which, by the way, this information will really help you with the strategy we talked about, the 3 ways to grow your business strategy from Jay Abraham, which was covered in the video, which I included as a bonus, which is getting everything you can out of all you've got, which is arguably the only way you can really grow your business, is to increase the amount of clients, to increase the size of the transactions they do, and to increase the frequency of their purchases. So that being said, this stuff's all covered in here. And also I've added the element of adjusted hourly rate and really figuring out where your time goes and making the educated decisions based on it and tracking it all in this spreadsheet. Well, I hope you enjoyed that video and you are going to take and apply what you've learned. If you want a copy of the spreadsheet and you want to participate in the program, then you can take advantage of the discounted rate in which you can enter code 30 students and save off the regular price of $97. And as mentioned, I am planning on building this course further and entering the mass market with it. And you can check it out on my website at onlinetrainingforentrepreneurs.com. Thank you for watching, and I'll talk to you soon. Take care.